Look, any delay of NEXGEN pounds is going to be better for NEXGEN shareholders because utilities are expecting it, right?
Yeah.
And so if they're turning around and saying, "Look, sorry, it's going to be another 12 months," guess what? The price goes higher, and guess what? These guys have got like almost zero contracts out there, or fixed price anyway. So what's the problem here?
Yeah, that's how I see it. Like, it's not like it's sort of good either way because you've got the highest grade ore body in the world, and you've got, even if you get 20 million pounds out in the first year compared to 30, like it's still 20 million pounds.
Yeah.
This is general advice and my opinions only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. LEVRD operates as corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes.
Right, bag holders and stop loss haters. I'll tell you what, I'm on two stocks at the moment. One of them's uranium, and mate, there is no better man in the world than Mr. Guy Keller from Tribeca to come and talk uranium. It's been a while, Cobber. How are you, mate?
Oh, Matty, great to see you again. Ducking and weaving like everybody else, I think, at the moment. Trying to get my head around, what's going, what's on, what's off, what's up, what's down, what's left, what's right.
Yeah, pretty much. It's we were saying before, she's a bit of a miserable day on the market today with new bombs being dropped. Mate, is it? How are you weighing up going shopping versus seeing what's panning out in the uranium world?
Well, yeah, I mean, it's certainly there's a lot of hysteria around, a lot of movements, but the thing is they're both ways, and I think what we kind of worked out through May was, you get to levels in uranium stocks that you like, and there's no company reason why it shouldn't be down there. Then you just got to shut your eyes and buy it because tonight's, every other night's been a different response, and these things can be up 10 or 20 in a heartbeat. So, as you said, there is some bargains to be had. So I guess we're selectively shopping through June. Wait a little bit closer to the end of the year just to make sure there's any of this tax loss crap in Australia gets out of the way, and then we can, buy with a bit more confidence into July.
Yeah, well, mate, I want to start before we get into we'll focus on the ASX stocks, but on the broader sense, I think listened to old Justin Hoon last night, the Hoonie, as I call him, and he made a comment. He was at a conference recently, and he said UxC were presenting. Obviously, UxC are what you'd class as a bit of an independent analysts of the nuclear fuel cycle. And so sort of one of their comments was the biggest risk they see, and this is coming from an independent source, I will say. They don't sound like they're stockholders as much. The biggest risk they see to this whole nuclear fuel cycle going forward is uranium, probably one of the least important things for the power plants in terms of the cost. I think it's 8% of the cost or something, securing the actual uranium. But that's what the biggest risk they see at the moment, which is probably the thesis that's been getting beaten a lot, and what you're investing in mostly. But what's your take on those comments?
Yeah, look, I mean, I think it's accurate. I was in the States a few weeks ago. I spent 2 weeks there. I saw 5 uranium projects. Went to an industry conference focused on small modular reactors and advanced reactors, and met a whole bunch of industry players. So it wasn't an investor conference, which I don't generally like investor conferences because they're always trying to sell you something. Industry is actually people rolling their sleeves up and doing the work, and selling the nuts and bolts and the pipes and the valves and the seals and what have you. Look, the interesting thing there was you're right. There's still seems to be this sort of assumption that the fuel cycle, advanced nuclear, even the gigawatt scale AP1000 10 packs, they all need help. Supply chains need help. But don't worry about it. The market's going to solve the uranium problem. And I was kind of sitting there saying, and so where's that happening? And he's going, well, what are you talking about? It's $85 spot, it's a $95 term. And I said, yeah, great. How much spot response are you saying? So, there will be a moment in time where the rubber hits the road. Probably in mid-July, there's some key dates in the US. Section 232 announcements due mid-July. The DOE criticality race is the 4th of July. So I think there's probably going to be a bit more focus on US. And I'm pretty certain the DOE are not muppets. So they're very well aware that the US industry cannot provide them 53 million pounds of uranium and growing per year. So potentially they might be forced to look for allied countries. But, again, that's kind of speculation from my perspective.
Yeah, I suppose that's the US, but and US are yet to really, you'd say, commit to big, huge reactor build-outs in the country, but China has, and that's been going on a while. And we saw there, the Bannerman deal, for instance, they're starting to get involved. Is that a lot of that those African projects? Is that where you're seeing a bit of an opportunity once the Chinese get involved? Because it's pretty clear cut that they got shit building at the moment, and they will need uranium, and they want to probably make money from owning it as well. Is that where the chance is?
Yeah, look, I mean, I was actually in Namibia the week that Bannerman deal was announced. So, pretty much on the coalface, and we went out to Etango the next day, or the day after, I can't remember. Anyway, we went out after the announcement had been made. I'd had the week up there. I mean, what a deal. That's a phenomenal deal. And I think, again, the market fails to grasp, and the fuel buyer fails to acknowledge that offtake deal with the Chinese, where they can load a Chinese ship in Walfish Bay, which is 100 and something kilometres from site. And, within 7 days of that ship leaving port, they're getting paid. I mean, the biggest problem that uranium, producers and developers have is this massive, massive lag of working capital between mine mouth to actually getting paid. So to be able to get paid, where often you're on the water for 30 days, you're then trucking to a conversion facility, you're sitting in there for 4 to 6 weeks before the final assay comes back, and then you're getting paid by the utility on a 30, 60 or 90-day payment term. So you could be, you're short of cash for up to 6 months. To get paid within 7 days, I mean, and again, 60% life of mine, with the right price environment, which I believe we're in, you'd be as you're ramping that mine up, you'd be shipping every single pound into that contract, just on the working capital costs that you have there. Again, pounds that aren't available for the West. If any of your long-time listeners followed this for a while, you remember Bannerman originally was sold on a much bigger scale project. I call it Expand or Extend or whatever it is. Again, this Chinese deal makes that very doable now, because you got that source of capital that's prepared to back it for pounds. So I mean, the Chinese are the only ones, committing capital certainty and an offtake certainty to these incumbent, these developers to get them moving at these prices. Everybody else is waiting for capital that's non-existent at the moment, or prices that aren't available for them yet. So, good deal.
I think if you contrast that, well, we may as well stick in Africa before we go to North America and Australian uranium. Like talking about that payment. Speed of payment for the Namibian operations, it's probably the absolute opposite to what Lotus has to deal with Malawi. And I've got the chart up here of that. Is it a falling knife, or is it like a point where it's like far out? There's not many producers in the world. It has to become cheap at some point. But I've heard that's one of their struggles, is just getting the uranium out and just out of the country onto the boat, and then getting it paid is like a monthly process. So the working capital movements, and couple that with the contracts they've gone into and then underperforming on nameplate, like they've just got themselves in an absolute pickle, it appears.
Yeah, I mean, it certainly shows that mining's hard and uranium mining's harder, and everything costs more. And like they've been kind of a little bit unfortunate as well, because obviously the military action in the Middle East has increased the price of sulfuric acid, because they were obviously trucking that in, and that was a massive logistical exercise for trucking acid and diesel. And what were the two things that went up the most as a result of the Middle East was acid and diesel costs.
Yeah.
So had they waited and had the acid plant commissioned and waited and had the grid connection, then potentially they wouldn't have those. Well, they wouldn't have those cost pressures. But as he said, eagerness to get themselves into contracts has put a gun to their head to force them to move forward. Falling knife, I don't know. I mean, it's one I dodged, thankfully, on that rollover. But I don't. There's a few things I don't have. I'd need to see pretty good market conditions to wade back in here. I mean, again, the dark horse, of course, as we've seen in the other African play, potentially, if you believe the rumours of that MOU in Aura, is the Chinese White Knight comes in and does a Bannerman style deal and recaps them and off they go. But we'll see. And again, if that happens, even better for the uranium market, because there's more pounds that aren't coming west.
Yeah. Like do you? I suppose from your retail compared to someone in your position where you need liquidity, you can't be just punting stocks daily, or you can. But is it? For something like Lotus, is it waiting for that? If there's not the White Knight Chinese outcome, there's potentially they've got themselves in that much of a pickle. There's a recap for guys like yourself to come into the stock at a pretty significant discount for a reset. Is that how you're viewing some of these developments, these operating mines?
Yeah, I mean, I think that's kind of like it's like, obviously we can be short, and this is not one I'm short, because it's kind of hard to be short it down here on that exact basis. It's already heavily shorted, so maybe there are a bunch of edgies who are looking for a recap on that to cash out on that position. But yeah, I mean, like everything, there's the small cap market, as you know, here in Australia, are pretty emotional and opinionated about things, and you've got to shake that belief structure and convince them that you're good now, and then when that happens, then off it goes again. So
I suppose the best performer. That's the fact that pretty much most of the uranium producers at the moment are not making much money, breaking even or losing money. The ones that are performing sometimes the best are the ones that have just got a story that aren't producing anything, which means far out. If there's a formula that means the uranium price has to go up, it is that at the moment.
Yeah. Yeah, well, I mean, as I said, you've had, 9 restarts? So, again, these are companies where there's been sunk capex in plant and equipment and mining infrastructure in past cycles. So they haven't had to rebuild, or, they haven't had to build from scratch. They've had to refurbish. And literally every single restart has had issues of cost, of unplanned issues. And then some of them, once they've got through the refurb and the restarter, then had issues around, we're not drilling fast enough for wellfield replacement. We're not moving fast enough on permitting for new header houses, especially in the United States. And so, there's a whole bunch of then operational issues, because none of these guys have produced a pound of uranium since 2010, and half of them, even then, in that last cycle, didn't get far enough along in their projects to produce a pound of uranium. So, we're kind of expecting adult outcomes from a fairly juvenile, a base of operation and mine building expertise.
What back in Namibia, mate, like Paladin, Deep Yellow, Paladin's another example of it hasn't been it's not like they're absolutely printing money, like they're one of the more decent sized producers that are, in the £4 million plus arena compared to, mobs like Peninsula and Boss that are, struggling to get 1 to 2. How are you looking at them at the moment? Is the North American aspect of the company going to sort of drag on, or is the value getting put in the Paladin side, or are they waiting for like a bloody hyperscaler to come in and secure an offtake for the PLS side of things?
Oh, look, I mean, I think Paladin are doing a great job. I think the market's kind of unfairly treating them at the moment, in my view. And I think a large part of that comes down to the analysts covering the stock. They're all kind of sitting there saying on Langer Heinrich, the stock's expensive, we need value in PLS. And the very first question I ask them is, what's the long-term uranium price target you're using in the model? And if it's anything less than $110, then you're absolutely, living in a previous century. Because I don't understand how you can sit there with a look back on the lowest price contract, according to TradeTech, is $95, according to UX is $93. That's a look back. That's the lowest price that's already transacted, which means it ain't going to go any lower than that on the next RFP. And how you can turn around and have your long-term price below $95 or at $95 when you're sitting there putting your S&Ds out saying to the market, we don't have enough primary mine supply, the only demand risk is up, and then saying, but post-2030, we think the uranium price is going to come crashing down because of all the supply. I mean, it's just ridiculous. So I think, if you go and put $110 into most of these analyst models, or more realistically, where I'm kind of pitching things around $120, you're not being outrageous. It's not like a Jeff Curry $300 crude oil call, $120 is not actually that far away. You're going to throw $120 in, you don't need any of these second assets to be proving your valuations. And as I said, I think operationally, Paladin are doing a great job.
Yeah, they're the one of the few that actually increased guidance after, they did have downgrades in the, previous years leading up to it, but they did, things started once they got into the fresh rock effectively. How do you see that operation like sustainably going forward? Like fresh rock going to be consistent? Like what's the vibe on sort of what they're going to deliver like multi-years out?
Yeah, look, I mean, again, I was out there in February. I got a lot of time for Paul Hembarrow. I think he's a great operator. He's exactly what that company needed in the leadership structure. I've sat down and had a long conversation with the chair of Paladin as well, Cliff, about the direction of the company, of where they're going. And, these are the things you notice when you're on site. You get out on site and, I don't want to be spending all day talking to Paul. I'm talking to everybody I can that's made available to me. The culture's good. Everybody knows what their role is, but more importantly, everybody knows what the person on the left and the right of them's role is. Well, yeah. They all know how it fits. They got the plant doing what they need to do, and they're moving around that ore body and the new parts of that pit with pretty good confidence about where they need to go and how they need to get there. So, as you know from being on the tools, the culture of a site can make all the difference in productivity.
Oh, and you get a good gauge of it as soon as you walk onto it, based on whether they're happy or whinging about they're not getting paid enough, usually.
Exactly right.
Because it could be like bloody gold miners 2 years ago. Like, not many were making, when it was $3,000 an ounce, not many were actually making money. They were all at a growth story or something. But as you said, if their sale price goes from, $83 a pound or $85 a pound up to $110, it just materially changes what a mob that's producing 4.5 million pounds can start printing. A very different story.
Yep. Yeah, exactly right. Exactly right. So, and also when you get those moves, I mean, I know that they're going to go up to the 100 in June, which means that, less small cap money will be in that stock. But it's like the Cameco of the ASX, when things go ripping and roaring in uranium, like that's the first place people are going to go. It's the go-to name. Let's buy that for the uranium exposure. Then let's look down the capital stack as to where we want to put some risk capital. But it's kind of their beta plus. So it's the liquid one. It's where the instos are going to go, especially because in small cap land as well, like the other 6 stocks in that the small ords, they're not standalone fantastic stories at the moment. They've all got some issues, whether it's in production or the oh my lord, they're about to go into construction, we can't touch them, or we don't know whether they're going to make an FID. So from that perspective, I sort of sit there and look at it and say, it should move to the right way.
Yeah, right. Other Namibia, deep yellow. God, when those rumours were going around about them raising capital in the newspaper, far out, I bet you they wish they did now, because they were up at, I've got the chart here, I think that's when they were sort of near that $2.50 level, and they're currently at $1.41, so far out they should have raised.
Yeah, look, I mean, that's kind of, it's an interesting story. Obviously, they had some changes late last year, which the market didn't like, and now they're sort of trying to refresh their board and management structure. But it comes down to exactly the story under the old management of prices aren't high enough for us to seriously consider an FID. And that's kind of why there was some of those bigger small cap names that loved that stock so much. It wasn't that they all did love John Borshoff, but they were there because he was pretty much sticking the middle finger to the utilities, saying, I'm not moving on this thing unless you'll show me a price, a firm price that starts with at least triple digits.
Yeah.
And, it's kind of seems like they're still in that mode, but they're just not public about it, and so they're probably not getting the recognition for it because, as you said, every now and again there's a rumour that there's a capital raise because they're going to make a final investment decision. Like if they came out more publicly and said, listen, we're going to continue to look at site preparation and what we can do in anticipation of a final investment decision, but we really do need to see some very solid pricing interest from utilities before we're going to do that. If they said that, then the market would probably go, oh, okay, maybe this is a good place to not have near-term construction risk.
Yeah, I assume the capital raise thesis would be similar to signing contracts. Like they're not going to raise capital when uranium price is low, because if they're going to wait for uranium price to go up to get better terms on the contract, technically their share price should be a shitload higher as well. So yeah. I assume they're just going to work in together.
Yeah. And they don't need to spend a huge amount of money at the moment. They've got plenty of cash.
Yeah. What other African stuff you like, mate, before we leave the continent? Oh, the only one I've got a chunk of Atomic Eagle. I was looking at it's Zambia, bit different, but same thing. A lot of pounds. They got money to drill. They haven't got a development story. They're not producing anything, so there's no risks there. And helps when one of the directors is buying shitloads on market. What else? What are you in that one, or are you having what else you looking at in Africa that maybe they'll get the Chinese white knight investment?
Look, I mean, I know that group, Atomic Eagle, pretty well. I knew them in their previous iteration in Canada. And, there's plenty of potential catalysts there. I kind of look at where I am in uranium investment at the moment. I've got kind of enough exploration stories as it is. Much of my focus at the moment is on the nuclear side. And so, I've been pretty clear what I'd love to see from them. And when that happens, I'm pretty interested in what they're going to do. So, as I said, it's there's a bunch of uranium explorers where, for me, it's the timing of when I get involved. And sometimes people will think that I don't like it. It's not. There's plenty of things I do like. There's plenty of things I don't like. This is not one of them. This is one I do quite like, but I want to see some certain things, and they're aware of that. So,
Yeah.
Because as I said, every dollar I have invested is a potential dollar that could be making money somewhere else. And so I just got to have to be. And sadly, as much as I'd love it, I don't have millions of dollars flying in the door from brand new investors every time I open the fund. It's a bit of a harder slog with that. And when there's wars going on and all sorts of things, people are less happy to part with their hard-earned shekels, or when they're paying more taxes and things.
Yeah. Happy to set up a referral program there if you want, mate. On the back of this, sure. I'll chuck a link in the notes. What? I know you don't want to give away your trade secrets, but when you're looking at these smaller companies, because I assume a lot of these mobs come to you for, one for the capital, but also for the conviction on the story. If they got Mr. Guy Keller at the Nuclear Energy Opportunities Fund behind them, there's a bit of validation for the story. But timing wise, you're looking at things like, is it making sure the resource is, pretty underpinned and with the classification, or is it permitting, or is there a bit of everything? You don't want to be sitting on something for a year and a half waiting for him to find all this shit.
Yeah, look, it's exactly that. It's a bit of everything, but it also is, what else is going on at the time that I'm getting shown these things. So, if I'm getting shown a dozen of these things, then there's a ranking process, and the top 2 or 3 might win. Yeah. If it's a quieter period and there's less opportunity, and I am looking to redeploy some capital somewhere, then I might be happy to take a slightly longer term view, or a slightly get in earlier. But look, it's very project and jurisdiction dependent. I mean, if you're somewhere in the US or somewhere like that, where I know there's going to be some serious government announcements coming out the next few months, then I'm happier to be early in something, because that those kind of announcements will raise all of those boats. New jurisdictions. Again, there's uranium there. I'd love to see more of it there and more of it defined, to make it a proper district play, where you can justify, that it's got growth potential. But then there might be others where it's one of a dozen smaller players all around each other, all exploring, and people say, well, why'd you invest there? So, well, because there's 11 others exploring, so they don't need to find a £200 million deposit. Just need to prove a district kind of thing. So, yeah, I get asked that a lot, and I can never give a proper answer on it, because every single situation is different.
Yeah, especially like, you get to your ranking process, you're like, Farah, I've got to draw the last 5 out of a hat here. Speaking of them as well, there was, before we leave Africa, Niger, that sort of, there was the recent news that, Global Atomic might be back on the table. Talk about the most risky jurisdiction to go in. Obviously, Atomic Eagle have got an asset there as well. But Global Atomic, what do you think of that news? That's you've got to have some balls about you to go looking there.
It just, so Global Atomic never lost DASA. They just haven't been able to get the funding over the line for their asset. I think I've got about 17 different warrant strikes in that name over previous capital raises over the last few years. It's ironic that I think I got into that stock originally at about 40 cents, and here we are 8 years later, it's trading at 60 or 70 cents or wherever it is, after being up to about $6. Look, that ore body is worth hanging around for. It's a phenomenal ore body. And to their credit, they've continued to develop that mine development. This is Africa, right?
That's about as Africa as you get, Niger.
Yeah. And so, there's certainly not a huge amount. As I said, most of it's warrants. I've got a small equity holding there, but from a raise pretty much at 60 cents. Again, one of those things, if they get that development finance from the US, then, that thing rips again because, as I said, the ore body is just like phenomenal. It's just like no other ore body in Africa.
Yeah, mate. Let's go to Australia. The one that you've followed this story for many years, Boss Energy, mate. They are. It's been you ain't got to look at the share price here. Been a bit of a journey, very low at the moment, but it's they're sitting at $1.17, down from bloody near $6. My take on it's so weird in terms of, there's not many producers in the world. They've obviously got there's a bit of a bit of a hospital pass, you'd say, with the study being pulled and this new soaking technique being checked out, but they've got 1.5 or what is it? I think about 1.4 million pounds of uranium inventory. There's not many producers in the world, so far out. If there's a price increase, they have got so much talk to, making this work, but couple that with they don't know if this new technique's going to work. How are you looking at them at the moment? You've followed them for years.
Yeah, I did, and I still am. And what I kind of can't get my head around is that 1.5 or 1.6 million pounds a year is still 1.5 or 1.6 million pounds. And, that's what they're doing this year and next year and probably the year after that, which is, more than most other ISR deposits, ex-Kazakhstan, of course. Look, they're out in an area at Far East Kalkaroo there where there was always some questions as to how that would shape up. But, look, it comes down to, I think, an understanding issue from the market, and also a governance issue on how that was reported to the market. The reality is ISR is not an exact science. You're not, but no mining is. As once you get the rocks, you get the rocks. What you think's high grade in a pit suddenly becomes a low grade zone. Because until you're in it. So it's not unusual. And, I was as I said, in the US, I saw four or five ISR projects while I was there, and all of them are taking learnings from what the other ones are doing and having to adapt in different parts or different projects. So, look, I think the problem with that stock now for investors is it doesn't matter what they're doing this quarter or next quarter. All of the focus is now going to be on does this wider spacing pattern work, and is it the 2.45 numbers obviously it looks like it's going to be science fiction now. What number is it going forward, and how do they mitigate these problems going looking ahead. So whether you like it or not, whether you think it's cheap or not, again, my trade-off is if a dollar here is a dollar that could be somewhere else. If everything rips, is this going to go with it? Sure, to an extent, but it'll lag because everybody's decided they need to wait for the outcomes of this study.
Yeah.
Look, they're going to be able to get uranium out of that pattern. It's just at what cost and how efficiently. And then they're going to have to think really carefully about what kind of guidance they need to give. Most US ISR are not giving more than 1 year's guidance, by the way. The Kazakhs, throw out a blanket number and most of the time miss it. And, they've just got these systems that just go on forever. But they don't give guidance necessarily past 1 year. And yet, again, mining analysts here in Australia, because not one of them has ever covered an ISR operation or a fracking or shale operation, so they don't understand necessarily the differences in how you approach pushing a solution through a porous ore body and extracting a mineral from it. They're applying a hard rock or an underground mentality of, I need to see the resource. I need to see, because, you need to plan declines or shafts or pits. You need to be thinking 10 years out for your whole mine plan. As I say, you don't. But, as I said, we just got to be patient on that one and wait and see. There's kind of talks about, do they get taken out and blah, blah, blah. And then the project value and the pounds in inventory, you're getting pretty close to not much upside being priced into that stock.
No, well, what, 485 market cap, and I think just the inventory and cash and investments is about 200 odd, so not much over a 200 mil EV. And then you have a rip in the uranium price, that inventory becomes a lot more valuable with the price going up. I guess the learning I took from, because as you said, it's not treated like a gold mine, but I guess the resource that was underpinning that 2.45 million pound target is, if it was drilled, and it doesn't work like that in uranium, because there's no point drilling the crap out of everything when you're going to be infill drilling using those holes are used as wells and injection and extraction points. But you could see that it wasn't, if it was drilled to like an indicated level, when like a gold mine would be, maybe this it would have been known that it doesn't connect up the way it does to support a 2.45. So I guess that was a lesson I learnt looking at the future of an ISR mine, how much of it is actually drilled to a point to confirm it actually connects. And
2.45 was a nameplate capacity from a 5-year-old study that every analyst took as guidance. So it was never actually official guidance. They just plugged it in their models as guidance, again, because they were using $70 or $80 long-term uranium prices, and were saying, we need a mineral resource estimate out of Jason's and Gould's because your price, and we need to put 2.45 in because your stock's too expensive on our models. And you go, again, we'll put $100 in or $90 back then. Is it expensive? No, it's a hole. And, so, and unfortunately, as I said, the uranium industry pays too much attention to these analysts. And as much as I love them all, I don't really. But, there's 15 analysts that cover BOSS, for example. 3 of them have been around since kind of I was there. The other 12 have all turned up from coal or lithium or rare earths or oil and gas. And there's banks that have never looked at uranium before that are suddenly uranium experts. We got the Global Uranium Conference in October, and there's an ISR workshop, and I said to the organising committee, I said, we need to have them present their key findings and make sure all 15 analysts are sitting in that bloody room with a notepad for this ISR. They said, it's going to be really technical. I said, I don't care. They need to understand it.
You're not going to get much too much corporate work from these companies if you're chucking £1.5 million in your models compared to 2.45. So I think that's how it all works. So on the M&A side for them, because they're at a point where, at least they're probably at the least most de-risked in a way, just from the inventory and cash point of view of, producers compared. Like we saw, Peninsula just done their condensate, Lotus are in a bit of strife, Boss are at least debt-free, they've got a bit of cash, they've got the inventory to save them. But with, I guess, logical, it's either they got their 20% in Laramide, they got the small stake in Encore, but the 30% project ownership. But do you think that they're going to have to try and move first to retransform themselves, or is someone else going to be looking at them at these prices to get access to all that listed investments as well?
Yeah, look, I mean, I don't think they will get rewarded for aggressive M&A at this point. Which means, if you're not the predator, you're probably the prey. But again, there's only a handful of players in the uranium sector that have got the ability to move on. I mean, what did you say? 485 million. It's not a big market cap. There's not many that got that ability. So unless kind of an outsider comes in and lobs in over the top, but they're going to want to see some pretty good, have some pretty good technical understanding of that ore body to have the confidence. So yeah, as I said, it kind of just remains in limbo at the moment.
Yeah, right. Let's go to we'll go to the big dog. Not the one of the. There's two big dogs. We'll go to. Well, there's three technically, but this is the one that gets the most interest. Good old NEXGEN. And you're speaking about passive active flows for this is one of the main ones. It's like, and the common theme is it's like if you have a positive view on uranium, you own NEXGEN. Effectively, yeah. We've seen it. It's pulled back a bit recently, but and another comment from old Hooney was like the discussions with hyperscalers are pretty frequent now with mining companies, and I think there was a comment linked to NEXGEN about discussing offtake with hyperscalers. It's not just utilities now; it's hyperscalers that are looking to get these SMRs and everything going. How are you viewing this? I suppose positive view on uranium, you buy these big companies because you're going to know. If you have a negative view, you don't own them. But what's your take on the company itself?
You have to have it in your portfolio. I mean, it's the best ore body of any commodity in the world, full stop. Yeah. And I sat with Lee at lunch the other day, and we talked about a number of things, and he was presenting to a very full room. It was amazing. I mean, there probably would have been 45 people in this room at the bank hosted this lunch, and they were all sort of surprised how many of them knew the story. One of the big concerns is, is Lee Courier going to be able to build this mine? And my view is absolutely yes, because, he's been thinking about this as a mine since he basically discovered it more than a decade ago. And when I was out there a few years ago, it was really, really clear that site was being prepared not as an advanced exploration story, but as a mine site. We drove around and Lee was actually my vehicle back then and when we were there, and he said, "What do you notice?" I said, "Well, this road is it was going from the shaft to the plant." I said, "This is not an exploration track. This is a haulage road, right? You can pass two vehicles across this, no problems, and you've got bays where you can pull in if there's a wider vehicle." I said, "You've designed it already, like everything you've thought about." And he's like, "Well, yeah." I also think the beauty they have in their timing is, they've obviously got to sink two shafts into some pretty competent rock. And we've seen our mates, BHP, absolutely blow out and cost in the same province in Saskatchewan on the Jansen Potash project. And guess what? There's going to be a huge amount of that workforce that end up going across to Arrow and working on sinking those two shafts, because BHP aren't going to keep a whole bunch of contractors on the payroll after they sunk the shaft. They're not going to be mining it. It'll be different crew of people. So there's a whole learning equation of skill base that is sitting in Saskatchewan and surrounding provinces who are going to go, "Oh yeah, we made that mistake at BHP on Jansen. Let's not repeat that here." And again, the economics of that project, if you have a cost blowout, who cares? On the current structure, at $85, that debt's repaid in less than a year. I mean, find me a mining project where you've got those economics.
Yeah, it's similar to what DeGrussa was as a copper story back in the day, just ridiculously high grade, and it just pays itself off so quick. No matter, and you could do nothing wrong there because it's so high grade.
Yeah. And as I said, there's great liquidity now in the ASX. There's a good loyal following of small cappers that are in that stock. Lee and the team have done an enormous amount of publicity and PR and relationship building in Australia in order to get that following. And so I can't fault them, and I'm looking forward to standing over that shaft in a few years' time and celebrating the first ore coming out of that hole if you'll have me over there for it.
Yeah. I don't get caught up in the Twitter naysayers and everything. And look, this might be a dumb question, but you'll happily answer it for me. What is the big downside to it? Like, let's say realistically, and look, it might be realistic. Realistically, it takes a bit longer to do the shafts. There's a big underground development to do, and they don't hit their, £30 million in that sort of early first couple of years, and first production's in 2033 or something compared to 2031. Like, we're talking 5-6 years away from now. And if it's delayed by a bit, is that bad? Like, when
look, any delay of NEXGEN pounds is going to be better for NEXGEN shareholders because utilities are expecting it, right?
Yeah.
And so if they're turning around and saying, look, sorry, it's going to be another 12 months, guess what? The price goes higher. And guess what? These guys have got almost zero contracts out there. Or fixed price anyway. So, what's the problem here?
Yeah, that's how I see it. It's not like it's sort of good either way, because you've got the highest grade ore body in the world, and you've got, even if you get £20 million out in the first year compared to 30, it's still £20 million.
Yeah. And, the footprint, what are they processing? 1,000 tonnes per day or 1,400 tonnes per day? That's tiny. It's nothing.
Yeah.
And again, people don't grasp that. You go 1,000 tonnes a day, is producing up to 30 million pounds of uranium. Again, 1,000 tonnes a day is bulk miners wouldn't even get out of bed for 100,000 tonnes a day,
Yeah. Well, there you go. Maybe I'm not as stupid as I think. We'll see. But it'll come it comes to the point when you're leading up to that a year or two out, and you've got the analysts baking in £30 million, and it's going to be due by this date, and then the share price goes, and then if it is late, then that's where the trouble is. But at the moment, right now, I don't see what's going to happen if it's 31 or 33. It's not going to have much of an impact today.
Yeah, exactly right.
I'll just worry about the share price today if I'm going to buy it.
Well, as you said, it's rolled over. It's the whole sector's off kind of 15 to 20% in the last quarter. They're not going to be much worse than that. And as I said, it's like the moment it turns back again, people come into names like this and say, yeah, sure, I'll own that. Yeah.
How do you view buying more or less of NEXGEN versus Cameco? Cameco is obviously becoming it's your best vertically integrated your nuclear play these days, with the sounds like the amount of EBITDA they print off each reactor build through this Westinghouse half ownership, plus the talk they've got. I know their ageing assets in the Athabasca Basin. They're pretty firm in saying, look, there's nothing we see that we can we're going to spend a heap of money on buying that we don't sort of already have in our portfolio. How do you weigh up Cameco versus NEXGEN, or you just got to have both?
Look, they're different beasts. My view kind of, and again, it's just my own view, is that post-2030, uranium will be a very small part of Cameco's revenue pot.
Yeah.
I was lucky enough to spend some time with the Westinghouse people when I was over in the States. And the opportunity on that side of the business is just off the charts. And not just in the AP1000s, but also in the eVincis as well, the microreactor side, and eventually the AP300s. But they're kind of sitting there saying, we've got so much demand for AP1000s, we don't need to compete in the 300 megawatt space at the moment. And the 1000s are going to keep us busy as all get up. What I can also see Cameco doing is, is basically becoming what, like a sovereign nation like Russia and China, where it's a full turnkey solution. So you're approaching countries or utilities and saying, we'll build the reactors for you, we'll have our reactors built for you, we'll provide the uranium all the way through the fuel cycle, and we'll take care of the other end of the equation for your spent fuel, and go and fire some laser beams at it again and reprocess it. And so again, if you're in that 10-pack, say for example in the US or their ambitions in Canada, then Cameco turns around and says, great, so there's 5 million pounds of Cameco uranium per year that's not now available to anybody else, because we're going to reserve that for that 10-pack, and the conversion and the enrichment and the fabrication. Again, for the incumbents who are sitting there uncontracted or with less contract exposure from 2028 onwards in the US and Europe, going, it's okay. When we need it, we'll just go to Cameco. And Cameco goes, well, there's another 5 million pounds that are unavailable. And by the way, the rest's gone to India and, everybody else. I think those existing utilities are going to have that moment where they go, oh, wow. So, yeah, I know Cameco trades like a uranium stock still, but I view it completely differently.
Yeah. Right, mate. You may as well plug the crap out of your holdings. You'd be mad not to, because if I was in your position, I would have even led out with it. Mate, you said you're interested in the nuclear stuff at the moment. What's tickling your fancy at the moment in the market?
On the nuclear side?
Oh, nuclear, uranium, whatever. Right. We haven't covered.
Look, we haven't covered Peninsula, and I was out there. I was on site, as I said. That was one of the 5 ISR operations I visited.
Yeah.
I was absolutely shocked at the extent of the pipes that they had to fix in the plant when they pointed to them, and I said, "So where are those problems?" And they said, "There." And I went, "Where else?" And they went, no, there. I said, no, but the market was making out like your whole bloody plant was. They went, no, it was just there. Anyway, walked through that whole operation. The thing that's most interesting to me is that all of those other ISR projects, they've got capacity of 2.5 or 2 or 3 million pounds per year in their plant. They don't have the wellfield capacity to do any more than 1 million or 1.5 million pounds for more than 8 to 10 years. They don't have a resource, and because they've sat here for more than a decade saying, I've got a central processing plant and I've got this great ISR project, but they haven't spent any time on that. We drove from the beginning of the project area of Peninsula across it was a dirt road, but a graded dirt road, 20 minutes to get to the central processing plant. The whole left of that road was that 48 million pounds of inferred resource.
Yeah.
And I'm kind of looking at it, and again, on site, all of the issues that they've raised to the market, they've got through their well fields. They're holding their breath at the moment because they got their flow rates up. Then they had that gas issue, which was again nothing to do with the ore body. It was just the way they were introducing the lixiviant into the ore body, so the peroxide versus the acid. They worked that out, they pulled it all back, and now they're ramping it up again. But, I kind of sit there and I go, from the perspective of an investor, I've got all these ASX analysts saying we need to wait till the September quarter to get certainty. And yet we've seen Soul Patts put a convert in and equity. So after an extensive due diligence of an independent due diligence, before that, Davis and Kempner, another global institution, had external due diligence, and I understand they're different due diligence companies. So there's 4 sets of eyeballs that have done due diligence on that project and been happy to commit money at the convert level. Convert has got security on the capital stack that equity doesn't. Davis and Kempner find out Soul Patts are extending the convert, kick up a stink. No, sorry, you're done. They came in for equity. So again, they've come in for zero security like the rest of us. If it folds, we're all done. Soul Patts have then added more risk capital via equity. And I sit there and I go, 2 global institutions that have done extensive technical due diligence on the project, going there myself and on a tour, as I said, part of seeing almost every active ISR project in the United States, walking out going, and some stock analyst from Perth who's sitting there behind his screen putting through a model says, nah, it's not ready to go. As I said, I'm going to back the real money and back my own intuition there and say, you know what, I think this is a project that's got through most of its warts, you can never say all because it's mining after all, and they've got the resource to be able to build into that plant capacity of 2.5 million pounds, and if they need to, they can go and add some more drying capacity on the back end. So, you know, and that to me was the big differentiator, was that slide there, that resource area. They go, oh, it's only an inferred resource. Look, it doesn't take much, and I think now that they're recapitalising, they're looking at some really interesting drilling options. They're going to be able to afford to throw a rig or two out into that inferred area and find the next 10 or 15 million pound pattern, you know, and throw a satellite out there at some point.
What I guess if I was punting on this, my concerns are with when you got these ASX listed companies with you know, international projects, how the, you know, the execs are getting on the ground versus you've been over there. Like, what's the in-country team there like? Is it really run over there, corporately run in Australia, or is Australia involved over there? How does that all work?
Yeah, look, so I think the only thing that's saving George's marriage is that he's been married a long time, and he came back with a rip hat from Yellowstone, a rip cowboy hat that his wife quite liked. He's basically been living over there, and it's like a landman shared house, you know. There's George, there's Ralph, the project manager. There's all these bloody crusty old uranium blokes all living together in this doll's house.
Well, they're getting the branded tattoos and everything. Oh, the branded tattoo there, I think.
Yeah, exactly. I was hoping that they weren't going to heat up the cattle prod in the fire. I wasn't really looking forward to that. But yeah, look, so, and they're all good in a house in Sundance. They've got a ranch on site as well, where they've got all of their field team basically living there as well. So, you know, as I said, the previous CEO lived in Casper and, you know, I think set foot very rarely on site. And then George kind of turned up and basically said, right, I'm not leaving until we fix all this.
Yeah, that's good to hear.
And I asked him to send me a photo of him in the ripped cowboy hat, but apparently there was nothing appropriate. Visual I don't need. You don't need it either.
No, I'll tell you what, I would never share that if you showed me. Never. Right. Yeah. Well, that's answered that one. That is to me the most important thing with these finicky operations is that management presence on site regularly to, you know, holding the operation to account. So the fact that that's happening, that's a positive.
Yeah. Oh, look, and I think, you know, I was also talking about management on site. I think that alligator field leach trial as well. Andrea is a phenomenally good operator. She's just, you know, awesome technically, and you know, we were down there looking at that field leach trial at Samphire. I mean, that's progressed enormously well in a really short period. It wasn't that long ago they picked up that project, and here they are running a field leach.
Yeah.
And you know, again, spent the day down there and spoke to you know, pretty much everybody there as to what was happening. They had some independent hydrometallurgists out there as well, who I know from their work at Honeymoon. And, you know, everyone was pretty much on the same page. And, you know, Andrea's technical, so she knows exactly what they're telling them and exactly how much things should cost and what have you. So, you know, that's one to keep an eye on. They're in the second phase of their trials now in the low flow area. So, again, they're not just picking the high grade, but one of the less optimal areas. You know, and if that ticks along, South Australia, £1 million a year at a reasonable, you know, ISR. Plus, you know, they've got some good exploration potential that they're looking to focus on as well after the trial. So, that's kind of impressed me again, because it's people doing things. It's like it's not just a promoter with a glossy PowerPoint. They're out there doing that. Same thing with DevEx. They're about to go out, and Marnie's Finlayson's been a great addition. Tim Goyder's pretty focused now on that stock in his stable. And Brendan Bradley's a fantastic geo up there, and he's got some great relations that Marnie's now capitalising on. And they're going to go and throw a bunch of drill rigs up into NT after consolidating that alligator ground. So again, doing something, being able to report positive news to shareholders and report news. This is what we're achieving, because at the end of the day, a glossy presentation is not going to power 450 nuclear reactors around the world. People rolling their sleeves up and getting the drill bit in. That's how you solve this equation.
Yeah, interesting. I'll show you, how many site visits do you go on for companies you own and don't own?
Yeah, look, this year I've done a lot, actually. I did Namibia, I've done a bunch in Australia, and obviously the US trip. And largely because a lot of them are, it's not just pointing to a patch of sand and saying there's going to be a mine here one day. Like a lot of them are advancing or getting to a point where I need to go and eyeball things. And it's like I'm the guy that's taking photos of power lines on the sealed highway on the way in, because it's, again, it doesn't matter, you got, the best ore body in the world, but if you're in the middle of bloody nowhere, it adds huge layers of complexity. So this year I've been a lot more active, and there's kind of last year as well. I was in Queensland. I think WA is probably on the cards to go out and look at a few things there, especially with Jono Fisher hitting Twitter every 32 seconds.
And WhatsApp, far out. Do you get WhatsApp messages off him too with the bloody announcements? He's got I'm on that chain as well, far out.
Yeah. So, I don't mind that, a good promote. And, I've actually just been mapping out a few things in WA, just there. I'm in there a little bit in Cauldron, just in case Roger Cook changes his mind and John can't ring me and say, no, told you so. And, like the nuclear stuff for me is, a lot of that stuff is call options around this criticality test in 4th of July. So, people often say, how do you value them? And you're like, you can't. They're meme stocks. There seems to be a stack every 3 months turning up with a new nuclear technology. Played in a few of those, made some money out of some, still sitting in some. But, that I think, so there's basically 4 designs racing for 4th of July deadline in Idaho National Lab. One of them's already got there, Antares. So that's the first reactor to hit criticality in 4 decades in the United States.
What's criticality, Guy?
So it's basically it's you bring it up to the fissile response to show that you can sustain the reaction. So your neutrons being created and dispersed to be able to sustain that. So you're not bringing it to a stage where you are creating heat, which obviously then creates electricity. It's significant because from a physics perspective, a nuclear physics perspective, once you've proven that you can sustain that, it's then just a matter of ramping that up. So nothing goes wrong. There's nothing to stop that sustainability from moving forward. So and a lot of it also, they haven't actually designed. It's just the fissile response for this test. So even if they wanted to generate electricity, they haven't built that yet.
Yeah, right.
But, visited a number of those. So Antares made it. ALO will probably make it, and I think Ballard will probably make close to that. And then there's allegedly going to be a whole series of DOE and Department of Defence announcements around advanced reactors. So, I'm kind of playing call options there on the basis that all of those things will rip if and when that announcement comes. And then we make a decision on which one we want to own a little bit little bit longer term.
Are these how big are these reactors that are getting tested?
So these are all micro. So this test is the reactor pilot program.
Yep.
So they're all like 5 megawatt units. They're all tiny micro reactors. Like ALO, for example, are actually going to be building a plant at INL, and they're going to build a data center next to it. That'll be a 20 megawatt unit.
Yep.
They'll have electricity. They're a private company. They'll have electricity by 2027, selling it to a data company. So these guys are on the micro side, because it's DOE and Department of Defense, War, whatever you want to call it. They're able to bypass the US NRC process at the moment to prove criticality, and then their design gets fast-tracked through the NRC. So it's basically, the big proof of concept is US can strip away the bureaucratic delays that have plagued the nuclear sector in the US for the last 4 decades. That is the massive takeaway that everyone's getting excited about, is that we once, and again, back to a statement that one of the advanced reactor guys said to me. He said, he'd come from space. He said, we're going to do to the sleepy, scared, tired old nuclear industry what SpaceX, Bezos and Rocket Labs did to NASA. What NASA thought was science fiction for 4 decades, those 3 companies proved was reality in less than half a decade.
Yeah.
And they're saying, listen, the technology is not what needs to be proved. The technology has been around in labs for years and years and years. We just have to prove that we can advance manufacturing and the skills we've learned in battery electric vehicles and everything else, that we can design these efficiently, safely, and cheaply. Like when you talk to these guys, you go, you know what? And so this whole process is proving that these designs can get to a point where now they can go through the advanced manufacturing and design and engineering and start rolling, 10 or 20 or 30 or 100 or however many of these out, per year. And as I said, I went to 2 warehouses in the US, 2 factories. One of them, they're going to a bigger site, and they're currently furbing that out. And, like you're looking around, it's the only thing it's steel you'll find off the shelf. It's fabrication you find off the shelf. It's nuts and bolts you find off the shelf. The weld is obviously a higher grade than just a normal TIG weld, so there's a nuclear spec on that.
Yeah,
but it's not rocket science what they're doing, and even if it is, most of them have come from rocket science, so they know how to solve that. So yeah, it was pretty empowering seeing all that. I came away pretty excited about all that.
Yeah, right. Bloody mate, I better stop this before we go over past dinner, because I could talk to you for hours. Last one, mate. If you are gonna pick the next catalyst to get uranium price and equities ripping, what do you reckon it's going to be? I won't hold you to it. I won't hang shit on you if it's something else.
I think it'll be Section 232 in the US provides a clarity around the US's approach to sourcing uranium, and that'll get spot moving, which will get the stocks moving. Because I could sit here and tell you that it'll be another US utility missing out on £7 million tender, only getting 1.5, but the equity market doesn't care about that. I do. I think it's extraordinarily relevant, but it'll be something like a 232 will kickstart spot again, and the equity markets go ripping.
When do you reckon that's going to be?
So that's mid-July, I think.
Yeah.
The week of the 13th or whatever it is.
Yeah, right. So that'll be an extra turbocharge going into WNA September. So it could be a big few months, maybe.
Yeah. It might have a few people on the hop if they're all sitting up surfing at the Noosa Mining Conference.
Are you going to that?
No. Our guys are, but no, I'm not. I got some commitments down here, so and plus I'm no good on a longboard. So
fair enough.
We won't be able to do any meetings off the point.
Yeah, true. I'm heading up there. Is Benjamin going?
I believe he is.
Oh,
yes.
beauty. I mean, we'll be on the longboard together. Yeah.
The long board, sure.
Very good, mate. That was sensational. Thank you so much for sharing your wisdom. Yeah, great update. No point researching it myself. I'll just ask you. It's much easier.
Absolutely. Thanks, Matty. Appreciate it.
Cheers, mate.